This is easily the most excited I've been to make a video in months. Today, we are unleashing our inner nerd to find the single best dividend ETF to hold for the long haul. What's driving the hype? I created a brand new ranking formula designed to crown a winner with zero bias from yours truly. Trust me, if you're a numbers nerd like I am, you're gonna have a lot of fun seeing how these all stack up. And we aren't just looking at my usual go-tos, we're opening the floor to an all-time high 23 different dividend ETFs. That includes my personal favorites, plus a ton of candidates you guys in the community have brought to my attention over the years. Drop me a comment below if you have a fund that you want to throw in the mix for the next round. But for now, we have a lot to get into. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. And if you get value from this content, please overpower that like button, subscribe if you haven't already, and consider joining as a member to keep this channel sponsor-free. You know what time it is. Let's grow. Dividend ETFs. I love dividend investing. It provides one of the most reliable paths for building stable, long-term wealth. I know a lot of newer investors look at the last decade of this wild growth market where we haven't seen a true reversion to the mean and think anything outside of growth stocks is a complete waste of time. But there's no doubt in my mind that when the tide turns, we will appreciate the counterbalance that the value and dividend holdings provide in our portfolios. And don't get me wrong, I love growth ETFs too. My portfolio is a mix of both. In fact, sticking strictly to my target allocations between growth and value is what has helped me outperform the S&P 500 by mid-six figures over my investing career. I say this just to get ahead of all you keyboard warriors out there that are looking to roast the dividend ETFs based on this short time horizon. For the rest of this video, we are focusing exclusively on finding the best dividend ETFs available here in mid-2026. There's a ton of financial data to filter through. But to keep things focused, I evaluate dividend ETFs based on what I call the dividend trifecta. And that's dividend yield, dividend growth rate, and long-term total return. Now, if you've been watching this channel for a while, you know that I preach that dividend growth is the most important of the three because of the crazy long-term compounding effects over 20 or 30 years. But my perspective has evolved. High growth is great if you have decades to wait, but plenty of investors need cash flow today to pay real-world bills. They don't always have 30 years for the yield on cost to kick in. And of course, long-term total return helps keep us all honest, because short-term price noise shouldn't dictate long-term decisions. I've decided that all three of these core metrics deserve equal respect. And if you're still watching at this point, you're going to absolutely love how I implemented this into the new spreadsheet model. The best dividend ETFs. In previous updates, I promised to crown a champion every single time. And then in typical Teeps fashion, I failed to make the master tracking spreadsheet to do so. But I'm making it up to you in this one, and then some. I applied the upgrading scoring system to our results from last year and ran it against all the qualifying funds for this video as well. For now on, we officially have crowned a champion every single time. As a data purist, it feels great to strip away any personal bias and let the raw numbers dictate the results. And it's going to be way easier to explain how this works in real time, so let's just dive in. We're going to start out here on the spreadsheet that we've always used in this series, and that's spreadsheet number 2 on my free spreadsheet server, ETF Compare. Now this one has many different tabs for growth ETFs, all around ETFs, and in this particular case, dividend ETFs. Feel free to pull this one up for free if you'd like to take a look out there, but we're gonna live on the dividend ETFs tab in this one. Now I realize I'm zoomed in right now, I'm cutting off some information. We'll get to all the good juicy stuff on the right, but we're going to start out here by just looking at the tickers. This is a mix of my favorite dividend ETFs over the years, and you probably recognize DGRO, FDVV, SCHD, green means I own it by the way, VYM, and VIG. And you'll also notice that we have VU out here. Clearly, this is not a dividend ETF. It's the market, VU, the S&P 500. I always like to have it on all these tabs on the spreadsheet just for a general reference of how you're doing versus the quote-unquote market or the de facto investment of VU. Cows was one I got from the comments a couple years ago. DGRW, I had a hard time. I see this more of a hybrid fund. You can see its yield is only 1.27%. We'll get into that later. But a lot of you love it, and I added it. DIVB, a lot of people talk about in the comments. I like that one. A couple covered call or options types things like with DIVO, JEPI, JEPQ. Probably need to add some newer ones. They just don't have enough data yet. QQQI and JEPQ and some of the other ones. I personally own JEPIQ from Goldman Sachs now, but they're just too young. I need at least 3 years of history to add them to even this thing. You have Noble, that's your long-term aristocrats. And right here, I'm not going to read them all, but it's the index name here. But if you have any unique dividend ETFs, please throw them down in the comments and I may add it for future videos. That is how a lot of these got here. And I should point out down here at the bottom, we have VYMI. It's really nice to have a non-US, an ex-US dividend ETF in the mix. So I'm excited to have this one as well. And I may add SCHY for the next one. I noticed it's not here, but I remembered for this series, it's all coming back to me now. I won at least 5 years. The only exception was JEPQ because it was a new NASDAQ 100 covered call ETF at the time. And it was exciting. So I wanted to see some of the data, but you can see it has an NA here for the 5 year. And that's the one requirement I have is any ETF that I add, if you have any great ideas, it has to be at least almost 6 years old because you need the full 5 year CAGR look back. So if it's not 6 years old, if it doesn't have a full 5 year dividend CAGR look back, please don't recommend it yet. You can mention it in the comments to put it on my watch list, but just so you know, it won't be making this series. I think it'll be fun to go column by column here, and I'll just sort. And again, you can ignore VU. It's not a dividend ETF. It's just for reference. But you can see the most popular dividend ETF based on assets under management, AUM, how many dollars are invested in the fund, is VTV, which has a lot more AUM than I thought at 186 billion. That's impressive. And then you have VIG and SCHD, both over 100 billion. Those have risen a lot, especially SCHD, which has finally seen a nice little price jump this year in 2026. You have the old faithful VYM. I know a lot of you are fans of that one at 79 billion. JEPI up to 45. DGRO, one of my favorite staples at 42 billion. And wow, JEPQ, I haven't looked at this in a long time, has risen quickly at nearly 40 billion. But then the rest are under 25 billion, but there's plenty of high quality funds in here. I won't read them all off, but you can find your favorite. I know there's a lot of FDVV fans out there on my channel. It's at 10 billion, so it's coming up. It was a little newer and it took a while to get some momentum, but it's doing a good job now. And then DIVB here at the very bottom at 1.6 billion. When I started making these videos, it was at 700 million. So it's over doubled fairly quickly. My last video was about a year ago. And then again, I won't stress all these stats. This will be a way too long of a video. But with the holdings, it's not necessarily the more the merrier. Of course, you get diversified the more you have, but you also want to look at the top 10 percentage. For example, this world fund, this non-US fund, VTMI from Vanguard, only has 13.7% of its holdings in the top 10. That is incredibly low. As you can see, the market VU is at 36 for context. And actually, I'll sort by this. This will make it a lot easier. You have SPYD, S&P 500 dividend index is only 15%. And then Noble, those aristocrats, 17. Very good diversity in a lot of these funds. And then on the other extreme, we have things like SCHD at 42% of its top 10 holdings. So it holds 100 companies, but 42% is just the top 10 alone. And same with concept with DIVO, and some of them get even higher here. JEPQ with the NASDAQ 100 being an extreme. Okay, not that the other ones weren't important, but we're going to jump into the things that really move the needle now. So I'm sorted on expense ratio. And you can see that VTV has the lowest expense ratio at 3 basis points. VYM, VIG, DIVB, SCHD, they're anywhere from 0.4 to 0.6%, 4 to 6 basis points, pretty much identical. Even the international one comes in at a great 7 basis points. DGRO here at 8. I mean, really anything under 10, anything VDC and under, you're paying next to nothing here for these ones for some high quality methodology in some of the cases. SCHD definitely has a great one at 6 basis points, and a lot of these come in that same basket. And then you have FDVV is sort of on an island by itself at 15 basis points. And then from DLN and up, you're 28. I don't love that. Now, my hard rule is 50 basis points. You guys twisted my arm and made me add DIVO. You would not let me off the hook, so I did put it on the spreadsheet. But I personally have a really hard time at 50 basis points and higher. And you can see it comes in at 56. But now it's time to talk dividends, baby. And this trailing 12-month dividend yield is what that current yield is paying you if you bought it right now. And I should have also started with this, but I'm all over the map like usual. This data was pulled on July 21st. I had to do this video a little early. So by the time you're seeing it, it'll be slightly outdated, but still good enough for a video that only comes out once or twice a year. Now, of course, these covered call JEPQ, JEPI, DIVO, they're going to be higher than the normal dividend growers. And I decided to say everything's fair game. As long as you're a good quality ETF, you're under 50 basis points of an expense ratio, and you have 5.5 to 6 years of history for the full 5-year dividend CAGR look back, I'll accept your tickers now. I'm not going to be so anal anymore. But you'll see what happens in the next spreadsheet when we start scoring them. The truth will come out. But these covered call ones here dominate at 10.7% yield for JEPQ. JEPI is here at 8.1. Then you have DIVO at a solid 6.4. And then we get into our more standard, they own companies that actually grow the underlying dividends. It's more traditional dividend growth, as opposed to playing with like the derivatives and covered calls like these ones up here. And we have SPHD at the highest, 4.44. SPYD at 4.13. And then you have FDL here at 3.63. VYMI, I like that. The international flavor bringing in a solid 3.6. DVY, one that a lot of you are familiar with, at 3.3. And then my favorite, SCHD, is at 3.2. And then we'll just finish with the ones over 3, and that's HDV at 3.13. I won't read all these. Okay, I got to read the next one because a lot of you love it. FDVV at a very solid 2.8. I have a hard time again with DGRW. It's like, it's more of a cornerstone market fund rather than a dividend ETF. You know, don't throw tomatoes at me. And I'm even getting close to saying that with VIG as well. You should be at least 2-ish%, you know, from DLN up, I would say, to be considered at least a dividend growth ETF in this range. And then these covered call ones are going to be, of course, higher. But now let's speak more my language. We're looking at the 3-year dividend CAGR. This is the growth rate of the dividends that matters so much over time with the amazing, magical math of compound interest. And whoa, DIVO, okay, I see you. It's at 20.61%. I don't know if that's sustainable, but that's interesting. DivB, which is a unique ETF compared to some of these traditional dividend growth only companies, but it's very solid. I mean, definitely not throwing shade, but it runs a little differently. It's at a very impressive 11.3. And SPHD, okay, this is a little surprising to me, 10.7. That's very high. We have Noble, the aristocrats, coming in at an impressive 8.5%, considering these are companies that have grown their dividends for at least 25 years. That's impressive. Cows right there at 8.5 as well. The international dividend ETF at an inflation crushing 7.8%. DVY at 7.7 and SCHD down to 6.5, along with its friend FDVV. So these are two of my favorites, and the 10-year for SCHD is actually a lot higher. It's not listed on here, but hey, recently they hasn't been quite as good. DGRO comes right in the mix there over 6, and FDL is at over over 5.5. Now the market itself is 5.8. So dividend growth has been relatively steady over the last 3 years. And I won't read all these off. We're just going to stick around the top of the list. But if I miss covering it, you can find them all right here as I go. Feel free to pause the video, of course. Now we're in the 5-year dividend growth, and this is a little more important, and I would argue the 10 years even more important, and we'll get there in the next spreadsheet. The longer term, the better, because we're in this for the long run. JEPQ hasn't been around, doesn't count. DIVB takes the lead at 15.2. CAL's there at 12.3. That's really good. FDVV crushing the 5-year with a little bit of imbalanced dividends. It doesn't quite have 10, but I track it in another spreadsheet. It's only about 5 or 6% on its longest, I think 8 or 9 year CAGR. But still in the 5-year, it's a nice snapshot for it at 11.3. DIVO still impressive at 11. Okay, I'm going to start looking at that one a little bit. But that's that high expense ratio too, so I got to be careful. VYM comes in at a solid 8.9%. International staying consistent here across these two. And then VIG actually taking out SCHD here at 8.2, FDL at 8.1, and SCHD at 7.5, along with SPHD as well. And then DVY solid at over 7%, and DGRO just sneaks ahead of the market at 7%. Really, you compare this to inflation. So these are all crushing inflation. Your purchasing power is increasing just by holding on to these things, along with the market itself at 6.8. Okay, now we're getting our short-term goggles on. We're looking at year-to-date performance. So this is a little overblown. We don't want to put too much weight into this, but it's worth a glance. And by the way, this does not include dividends. The year-to-date and the 1 year are just performance. That's price alone. And then when we get over here to the 3, 5, and 10 year, that is properly total return. So it does include the dividend. So the price return alone for DivB and SCHD is nearly 20% in 2026 alone. That's wild. HDV, a very solid 16. FDL at 15%. And I won't read these all. I want to find some highlights. The value index is doing pretty well at 14. International is always fun to look at 11. And then a lot of VYM guys out there, a solid 11%. DGRO's at 10.5%. Oh, and there it is, FDVV at 8.9. But you know what? It's still ahead of the market VU at 8.8. You can see we've had a nice little value reversion to the mean so far in 2026. A lot of our friends here are beating the market, which is fun to see because I have a balanced portfolio, as I mentioned earlier. I like them all. Let's zoom this thing out a full year, and DivB takes the crown at 26%. International, I love to see it. I know VT has been ahead of VU lately, so this doesn't surprise me here. Slightly different mix with the dividend ETF, but it's at a solid 25%. VTV and SCHD at 22 and 21 respectively. Let's see, we have DGRO 18.4, VYM is tied. They're on my other series, two of my favorites. They're both slightly ahead of the market this year, which is 18.3. CAL's falls a little, but still solid. FDVV, same concept here at 16. That's not bad. I've noticed Noble and DIVO have been a little beat up here on these short-term returns. Again, this does not include dividends though, so it hurts DIVO, JEPQ, and JEPI. Now this 3-year total return, this does properly include dividends. So over the last 3 years, International's taken the crown. That's cool to see at 76%. DivB right there at 75, and then the market at number 3 at 71. And I expect this to be similar as we move to the right. Now JEPQ is there at 65%. I actually own JEPQ from Goldman Sachs, and I want to say it's closer to 80%. So it is beating the market. I track that on a separate spreadsheet. But JEPQ lags a little for the NASDAQ 100 world. FDVV, very solid at 65. We go down the list here. Some of the highlights. The value index is at 59. VYM is at 59, ahead of SCHD. Interesting. DGRW right there with SCHD, and there's DIVO. Recovering a little, but not fully. CAL's is down a little bit here as well. Interesting. Noble, it's really been struggling on most of these things. And then VDC, I don't really know why I added this one, a sector specific one, but it struggled there at 25%. Let's go to the 5-year return to get a little more perspective. And again, JEPQ doesn't qualify here. So number 1 is FDVV. beating the market VU, 95 to 85%. We have FDL and the international VYMI as well ahead of the market. DIVB and DLN right there. A lot of these guys coming right in there. You can check out your favorites. SCHD's had a rough 5 years. Oof, that hurts. But Noble down there, pretty low as well. Let's zoom it out 10 years. This is our final one. You have some NAs. A lot of these are not 10 years old. And I'm going to tell you how that reflects the scoring here in a minute. Now, I expected this. I think most people that are in this investing world understand that growth, which is half of VU, has outperformed value, the other half of VU, and most of these over the last 10 years. So, of course, VU will be carried by the Meg 7 at 304%. DGRW, again, more of a cornerstone fund, not a dividend ETF, here at 1.2% yield, is there at 255%. DGRO, the first one I consider a true dividend ETF, is leading the way as far as I see it at 244, VIG right there at 233, and SCHD looking better as we zoom out at 220. DLN's been solid as well, 219. The value's right there. I like VTV, a lot of people do. It has the most AUM out of all these, barring VU. Where's international? There it is, 176%, not bad for international. And Noble 150. I mean, really, all these have been okay. Interesting, SPHD really lags when we zoom out, even behind VDC. So this is some interesting information. But you know what? Now it is time to jump to that promised new master tracking spreadsheet to crown a champion. I want to mention before we go over there, unfortunately, VYMI did not quite have the full 10-year CAGR look back. It does officially have 10 years under its belt, but its 10-year CAGR is super high because it's comparing a trailing 12 months to only a couple dividend payments from before. It doesn't quite have the full look back. It will not move forward to the next part of the video. And all these tickers with under 10 years won't either. And let's get into why right now. This is the spreadsheet that I promised you last year. I finally created it, and it is spreadsheet number 15 on the server for free. You can look whenever you want. It's in Google Sheets in Excel form, just like my other spreadsheets, linked in the description of any of my videos. It's the Dividend ETF Champs spreadsheet. And these top tickers here are what we compared last year. Now, last year we only had these 12 tickers, and they all had the full 10 years of history, so we could properly score them. And we're going to open this up as we go, and I'll show you what I'm talking about here with the new scoring system as well. And then down here is for this current video. You're getting a 2-for-1 right now. So this is as of this year, and the data was pulled as of 7/21, and we'll see that soon. And you'll notice there are 2 new guys to the party, and that's DGRW. I tried to say last year was a hybrid fund. You guys were screaming in the comments, no, it's a dividend fund. And guess what? The customer is always right. You win. Give the people what they want. And we also added SPYD because it now has the full 10-year look back. So now we have 14 ETFs to assess and to crown a champion. Let's open this up one at a time to keep all the nerds out there on the edge of your seats. We're starting with total return, and I'm actually going to sort as we go here. Now, I'm going to talk this bottom chart. This is more just for your reference. I already made this video last year. It just didn't have this scoring system last year. But really, this video, this is the here and now. This is as of 7/21/2026. Whereas you can see this data pull up here is 5/23/25. So we'll focus down here, but we'll crown the champions at the end. You can see that DGRW, our hybrid fund, is the best 10-year total return. And I know we just looked at these technically, so we are going to move on, but just know that 10-year total return is a third of the weight that we care about, and we'll get there at the end, I promise. DGRO did well, so far you can see that DGRW and DGRO are leading the charge through one category, and you can go down the list. I won't read them all. You know, at the very bottom is SPHD, which is pretty low. I was surprised to see that. Now I've opened up and sorted by category number 2, and that is the 10-year, not 3 or 5. This is the full 10-year dividend CAGR. And again, with growth rates, the longer you go out, the more compound works. And that's what you're really getting. Data fluctuates a lot in the short term, quarter over quarter, trailing 12 months, stuff like that. So you want to zoom out on total return, especially with these dividend ETFs, where that's not the main point, but it does matter, and dividend growth rate. You can see SCHD takes this category, but DGRO is right there. That's a top 2 in both. So it'll be interesting to see the scoring at the end. FDL has really grown well at 8.9. It's exactly tied, by the way. This goes out to the 100th to make a proper rank, and these are both 8.93. I've just rounded them here, but in the background they're not rounded. So we have a true tie. Noble, of everything I've seen in this entire spreadsheet, I'm the most surprised by this, to be honest, because usually long time payers don't have the greatest growth rate. You got to trade one or the other. But Noble, they've grown at least 25 years in a row, every company that the ETF holds, and they've grown at 9%, which is incredible. SPYD, they're at 8.1, and I won't read all the way down, but you can see your favorites here. Now let's open up the next category. And this is a category I haven't historically weighted quite as much, but now I know that people really do care about dividend yield. We got to pay those bills now in many cases. And you can see SPHD comes in at the highest at 4.44%. SPYD, they're at a solid 4.13. FDL at 3.63. DVY at 3.27. SCHD at 3.2, and you can see up here, it was 4. A lot of these are lower now. I'll find another example of that. Where is DGRO? It's at 1.93 now, and it was at 2.26 last year. These yields have all come down because the price went up. Remember, yield on cost is all that matters for your specific dividend dollars. Like if you bought SCHD in 2013, your yield on cost is 11%. But this is current yield as if you bought it today at the higher prices. So this is what you get if you buy it right now. And then the last one above 3 is HDV at 3.13. Now, the drum roll, please. Dun, dun, dun. We have Dividend Power. And ladies and gentlemen, SCHD has won the crown in 2026 with the Dividend Power, which will be explained momentarily, of 127.8. And last year it won by a lot more actually at 134.2. So our double champion is SCHD. Now, if you're wondering what the heck this is, I equally weighted total return, dividend growth rate, and dividend yield in a single formula that shows what percentage of the total return, dividend growth rate, and dividend yield each one of these tickers captures. In other words, 128 of the available numbers here go to SCHD, and this adds up to exactly 1400% over the 14 tickers. So the average is 100%. If you're above 100, you're above average. If you're below 100, you're below average. You want to be solid at each thing because like on the total return, SCHD is 220%. So I take 220% divided by the total percentage, and that's the percentage of total return that belongs to SCHD. Same drill with the CAGR, same drill with the yield. And if you do formula stuff, you can see here is total return, here is CAGR, and here is yield. It normalizes them to be worth the exact same weight as each other. They're each a third of this dividend power percentage. So you got to be balanced at all of them. I think it's just a great way to assess a champion each time. And what I kept referring to earlier, keeping my bias out of it, I tend to value growth rate more than yield, for example. But some people value yield more, and then others are like, it's all about total return. And after some thought, I genuinely think they're similar value to one another. And the longest term version of each within total return, within growth rate is what matters. And then of course, yield just is what it is. Because with the yield, this truly is the yield you'd get if you bought it right now. And I do like that from a yield perspective, a cash flow perspective. It keeps it honest. But yeah, 128% for SCHD, FDL at a solid silver medal, in both cases actually, at 119. SPYD, one of our newcomers, thanks for that suggestion to this wonderful community from last time, comes in third at 113%. DGRO still solid, I'm guessing. Oh yeah, above 100 both. So it's above average no matter how you slice it at 110. And then rounding off the ones over 100, we have SPHD at 104 and DVY at 104 as well. And if you're below, doesn't necessarily mean it's bad, but it just means like other ETFs are objectively paying more, growing more, and returning more on average with an equally weighted scoring system. But yeah, this has been a really fun exercise and I absolutely love doing it. I can't wait to update this series 2 times per year. SCHD dominated the scoreboard as the best all-around dividend ETF for the second year in a row. It's no secret that SCHD is my core value holding to counterbalance my VGT and other growth holdings. I'm not surprised it took the top spot again. Its balanced methodology for buying low and selling high is just hard to beat. And I plan to hold my SCHD for years to come, but I'm more interested in your strategy. Drop your favorite dividend ETF in the comments below. And speaking of name dropping, I'd like to give a huge shout out to you incredible 37 strong channel members. And particularly in this one, to my new member, Daniel. I really appreciate your support of the channel. It really does keep it sponsor free. I'm here for you guys to help you reach long-term financial freedom, get away from all the sharks in this world. I worked in finance for many years. I know how this stuff works, and I'm genuinely here to help. But I do need to cover the costs. And you members absolutely make this worth my while. And you keep all the annoying pesky sponsors away for everyone else. I truly do appreciate you. And of course, I'm a little biased here, but this is genuinely my favorite long-term investing community on the internet. And then as I usually do, I'd like to promote my couple affiliate links that I have, the things I actually use and love, Seeking Alpha, which you see in most of my videos, and Snowball Analytics for tracking my HODL Factory stats. That's my portfolio of 20 individual stocks. I love Seeking Alpha for basically everything. I love Snowball Analytics for tracking. You can try them both for free, pinned in the comment below. If you like what you see, join up for the long term to save you some money by using my link, most important of course. And it also gives this scrub a little kickback, so I appreciate you that little bit extra. And check out one of these two videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.